CERAWeek by S&P Global, bringing together all of the top names in oil and natural gas for the annual Global Energy Conference. And Yahoo Finance had a front row seat, bringing top commentary, including a conversation with ExxonMobil CEO Darren Woods, where he spoke with our very own Julie Hyman about the energy transition.
Our emphasis has been, one, recognizing the solution set that the world's been pursuing with wind and solar and EVs is a necessary but not sufficient set of solutions, and that we've needed a much broader set of solutions to try to drive the change and the transition that everybody's hoping for.
For much more on the energy space, we're now joined by Pavel Molchanov, Raymond James, Managing Director and Equity Research Analyst. Pavel, thanks so much for taking the time here today. You just heard the commentary there from Darren Woods here. I'd love to get your perspective on what he had to say about this broader transition and what some of those takeaways that he's seeing from that seat at ExxonMobil from the CERAWeek conference.
It's factually true that fossil fuels will continue to be needed for a long time to come. I mean, no one has seriously disputed that. So when, we talk about net zero emissions by, 2050, right? That's 26 years from now, to state the obvious. And even then, by 2050, there will still be need, for some amount of fossil fuels, for example, natural gas to make chemicals, oil for aviation and the marine market. But it is a question of time, before, for example, global oil demand peaks and begins to decline. We just don't know yet, precisely what that timetable looks like.
So then, Pavel, with that in mind, what do you think this really tells us about Exxon's strategy then, given the fact that demand for oil remains high and is likely to remain high, like you were saying here, for years to come?
Well, we know that Exxon is acquiring Pioneer Natural Resources. It was one of the largest acquisitions in the history of the oil and gas industry. We know that Exxon is investing in some kind of renewable and energy transition initiatives, so carbon capture that you heard in the interview about. But look, as a general premise, the only oil companies today that are truly kind of needle moving in their, sustainable energy investments are in Europe. So these are going to be companies like BP, Equinor, Shell, Total, Eni. American, oil and gas companies are generally further behind in their energy transition plans, and the same thing, I would say for companies like Saudi Aramco or PetroChina or Petrobras.
Pavel, I wonder from your own modeling and your own research here into these equities, into these major oil and gas names, what timeline you're kind of annexing to some of the ambitions that they've communicated to the street?
Yeah, so net zero for just about all these players is middle of the century, right? So that's a long time from now, to say the least. It's safe to say that none of the executives who have made these net zero decisions in recent years will be running the companies once net zero actually gets implemented by the middle of the century, which means it will be up to the subsequent generations of management teams, to make the kind of the tougher decisions for how to reach net zero, within the next 25, 30 years.
Do you foresee a changing of the guards or a changing of the person behind the Resolute desk in the White House as throwing off some of those timelines?
Well, as I mentioned, the most ambitious, roadmaps for, in the near term for energy transition in the oil industry are in Europe. So of course, the U.S. election has no, relationship to that. As far as Biden versus Trump, short answer is no. Once companies have committed to net zero, let's remember, this is not because the government is forcing them to do it, right? Nobody forced Exxon to put out a net zero target. No, even in Europe, by the way, these are not legally binding, net zero requirements for the individual companies. It's a largely matter of ESG, shareholder pressure, kind of voluntary decision making. And here's the reality: no matter how the politics goes, energy transition will continue. Yes, governments play a role; they can play a useful role or a less useful role. But for the industry, it is important to remain on this roadmap, or frankly, risk getting left behind.
Pavel, let's zoom out a little bit, talk about what's going on at a macro level, because one of the big drivers in the recent price to the upside, movement to the upside in the price of crude has been Russia's war in Ukraine. Now, there is talk, or there is, some sort of line of thinking here that we could see a cap on the move higher if we do see more Russian oil come online. What do you see this doing to the price of crude, at least in the short term?
So when Russia invaded Ukraine, just over 2 years ago, the number one question right at the outset was, would the Kremlin try to weaponize its oil industry? In other words, deliberately cut off supply as a way of hurting the global economy. And the Kremlin tried playing that game with natural gas, but not with oil. So that's why when oil prices ran up in the middle of 22, they came down pretty quickly once people realized Russian oil is continuing to flow. In recent weeks, however, we have seen the war quite literally begin to have an effect on Russian supply, because Ukraine has become skilled at using drones to physically attack Russian oil infrastructure. Now, it's not the oil fields themselves; those are too far away in Siberia. But the refineries across Russia, the European portion of Russia, that are processing Russian crude, have been attacked numerous times by Ukrainian drones in recent weeks, and that has pushed up the price of oil, and in particularly the price of refined products, so gasoline and so on.
Pavel Molchanov, always great to get your insight. Thanks so much for hopping on with us here this morning. Raymond James, the Managing Director and Equity Research Analyst. Thanks, Pavel.